So you have this home loan, it's going to be around for a while, but how do you smash it down? And sometimes, you go along and it just doesn't feel like it's moving, right? So we all know if you make additional repayments, you pay off your home loan faster, but there's a little bit more to it because understanding where you are right now in terms of your budget and your cash flow is the only way to try and find a pathway to get to where you're going, right? And I think one of the key things that a lot of people miss out on when they do their budgeting analysis is planned future lump sum expenses, right? So we all know that you kind of set a budget and you go along and something unexpected comes along. Well, some of those things are actually not that unexpected. For example, car updates, right? Holidays, children's expenses, schooling in the long run. We can actually account for that in this tool that we use. It's a great system. It's an add-on to our standard bunch of services. But what it does is it gives you real clarity and it kind of prompts you to think about those expenses that you might not always think about. Like what? Well, kids' party costs are here. You've got, let me see another random one. Um, you've got things like boat insurance, chiropractors, optometrists, right? So there are a bunch of things here that you can add in. In this example, we have a couple that have got pretty standard kind of expenses here, right? And a mortgage of roughly, this is working off a mortgage of around 800 grand. We can look at this and go, okay, if they have, so this is in this example, you've got say 165 grand net income coming into the family with plan and other expenses. Roughly it leaves them with about 40,000, give or take. Some years they've got those lump sum expenses. So in this example, if they applied most of the spare funds into their home loan, they would achieve a much shorter home loan term, but they would also have some insight into the budget and retirement, whether they could afford retirement. And the interesting thing here is astonishingly, they would save quite a large amount of interest if they stuck to a rough kind of a budget, right? So now, the other really important thing though is, okay, so you've got a budget, you kind of know where you're heading to, right? And let's say you use our services, you use this tool and you kind of know where it's at. What about how do you get there safely? And this is where some specialist advice from a financial advisor like us comes in handy. So what we can actually do for you as well is, apart from having all the detailed assumptions of basically your budget and everything you've kind of gone through to reach these goals, it is also really important to understand how you can do it safely by using a revolving credit strategy or an offset home loan strategy. They have their little nuances and how they work, but effectively the key principle here and the key thing that which makes you feel a lot safer is that you can make additional repayments but still have access to some or all of those additional repayments over time. And psychologically, if you know that you can get back money in an emergency or an unexpected expense, then you kind of feel a lot safer in putting more in towards the home loan. And that gives you the higher chance of achieving those amazing results, which we can forecast and get a feel for, right? So thank you for watching. If you are interested in this, get in touch with us. It's basically, our mapping service. You could call it Hamish from monline.co.nz.